This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill, markets move fast, and if you're not ahead, you're under. It is Thursday morning, June 11th, 2026, and we are staring down one of the most consequential macroeconomic sessions of the year. The European Central Bank is stepping up to the plate, US CPI data is actively digesting, and the Commodities Board is completely fracturing. Let's get you caught up for the global open. First up, the 60-second macro and commodities flash. Natural gas explodes. The energy sector is officially bifurcating. Natural gas just executed a massive 18.9% single-day surge, decoupling completely from the broader commodity sell-off. Extreme above-normal U.S. temperature forecasts have triggered violent short covering. Meanwhile, crude oil weighs peace rumors. While gas rockets, crude oil is facing temporary headwinds. Global benchmarks slipped over 1.3% as algorithmic traders try to price in renewed back-channel peace talk signals out of the Middle East. However, persistent physical choke points keep the structural floor incredibly tight. Gold breaks critical support. Precious metals are taking a hit. Gold has slipped below its 200-day moving average, hovering around $4,534 per ounce. The combination of a relentlessly strong U.S. dollar and hawkish Federal Reserve risks following hot jobs data is biting hard into bullion. We are also tracking a wheat and soy squeeze. Agricultural markets are flashing deep warning signs. A severe USDA wheat supply shock is actively colliding with surging biofuel-driven soybean demand. With the Middle East conflict elevating freight and fertilizer costs, global food inflation is preparing for a second wave. Finally, the ECB hikes into stagflation. Today is the day. The European Central Bank is executing a highly anticipated 25 basis point rate hike. The hike brings the deposit facility rate to 2.25%. The EUR/USD cross remains heavily fractured. Europe struggles to balance imported energy inflation against slowing growth. Let us take a deep dive into the aggressive divergence within the commodities market and how the US dollar is crushing both precious metals and the euro. The data hitting global terminals this Thursday morning proves that a one-size-fits-all macro strategy is dead. You cannot treat commodities as a single asset class right now. Here is how the underlying structural forces are dictating today's price action. Look at the energy market split. The massive 18.9% rip in natural gas proves that localized physical demand can instantly override macro sentiment. Traders attempting to short natural gas based on broader economic slowdown fears just got steamrolled by weather forecasts. Conversely, crude oil is trapped in a headline-driven tug-of-war. Speculators are selling oil on ceasefire rumors. But they are ignoring the fact that the Strait of Hormuz remains heavily bottlenecked. If you are trading energy today, respect the physical constraints. Next is the metals reality check. Gold's breakdown below its 200-day moving average is a massive technical warning. Despite the ongoing geopolitical chaos, gold is being suffocated by the US dollar and the expectation of higher for longer US interest rates. Institutional capital is prioritizing the guaranteed yield of U.S. treasuries over the zero-yield safety of precious metals. Meanwhile, industrial metals like copper are facing tariff roulette, caught between tight physical supply fundamentals and slowing global manufacturing data. Do not ignore the agricultural squeeze and the euro. The USDA's recent wheat shock and biofuel soybean demand are creating a perfect storm for food prices. This is the exact reason the ECB is forced to act today. With agricultural and energy commodities structurally elevated, European inflation cannot cool down. The ECB's hike to 2.25% is an act of desperation to defend the euro, which continues to bleed against the dollar in the foreign exchange markets. Raising rates will not print more wheat or crude, but it is the only tool Christine Lagarde has left. Here is the TradeFlow take. Today requires absolute tactical precision. The ECB rate decision and US CPI fallout guarantee massive intraday volatility. Avoid trying to catch falling knives in gold until it reclaims structural technical support. Keep your energy exposure hedged and respect natural gas momentum. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.